Hey, good afternoon, everyone. It's 1:20. Markets just closed. This is going to be like maybe the shortest video of the year because there's really nothing to talk about ahead of the USDA report tomorrow. The expectations for the report are slight cuts to yield and probably cuts to demand. That's really the expectation, and not a lot of move in the balance sheet. And our position is we think that's wrong. We think the yield's coming down in beans. We think it's coming down in corn, and our balance sheets are going to contract significantly in the coming months, and it's something we want to be ahead of, not behind. So here's soybeans. Had a nice reversal on Friday. We added a little bit of strength to that, closing right at 1370 ahead of the report. We're looking higher in this market, and it's going to take a move. Certainly below 1344, probably below this swing low down here at 1332 to really change our mind. So we like the idea of having a little bit of protection on. Obviously, if you're a farmer, your risk is down, so go ahead and protect it. But really, we're looking higher and think that re-ownership should be in play. If you want to own calls out into May, up around the $14.50, $17 or $15 range, I think that's a really good value for the opportunity that can present. And for 24 crop, 25 crop, we don't want any hedges on at this point. We just want to be long. So maybe some hedges in the nearby if you're worried about harvest and whatever and want to make sure it doesn't slide away, that's fine. But keep that upside open in our opinion. Corn, same way. Corn had an outside day down on Friday, has a bullish engulfing day today. Little volume, really nothing to write home about here. We think that this setup resolves itself to the upside, and we've talked about this for several weeks. 507. We got to clear those hurdles before we can get on up, but the funds are short here, and if that yield starts to come under 170, then this thing should get explosive back to the upside because that puts our carryout really tight, and we are seeing signs of demand picking back up. So we want to be long corn, hedged in the nearby. We are hedged with 470 puts that we have moved down from higher levels. Our upside's wide open. That's right where we want to be. For 24 and 5, we just want to be open. I'm not too worried about being stuck down with lower prices. Remember, you also have an insurance claim if you have a decent to moderate yield loss, and your prices are way up here. So you are in insurance money at this point in time, so I don't see any reason to have a huge amount of protection on down here as a grower. And now Kansas City wheat, it was ornery today, but this is what's made trading these markets so difficult over the last several months, is that once you get moving, and it doesn't matter about, choose your market, beans, corn, wheat, whatever. The reality is that you have markets that should trade to support, and then that support should hold, and then it doesn't, and then it reverses and goes right back through it. And it's happened for months here in the wheat market, and today's no exception. I mean, we ran stops below. Remember what we said Friday: this low should hold, and certainly this should hold. Well, it's just characteristic of these wheat markets just to run stops below both and now reverse and put it right back above both levels. So wheat is super frustrating to trade, as are all these markets. I don't think this move means anything other than shaking out anybody that's wants to be long that may have weak hands, right? So we're still looking up in wheat, we're looking up in corn, we're looking up in beans. This move didn't do anything other than solidify our view on the divergences, that they're still intact, and I'll show you those to kind of solidify that point for you, and so you can see them on literally everything that we follow, right? All 4 of our oscillators have big divergences, and today sealed yet another one. It's our 3rd consecutive, and the longer these divergences stay in play, and the longer they continue to confirm, the stronger the buy signal. So this should not have kicked you out of the market. It should make you want to own it more, in my opinion. So we're looking higher, not lower, and if we work lower and keep diverging, we're going to keep trying to buy it, because that's where the risk is to the upside, not the downside, in our opinion. All right. Obviously, we'll be back tomorrow with what with what happens with the crop report. It comes out at 11 o'clock. Should do enough to kick us kind of out of these recent little ranges and establish a direction for the short term. And then we think that the trade will start looking to what actual yield results are and what demand might do and moving forward. So hopefully tomorrow is the bullish catalyst we're looking for, and maybe even a better setup would be a bearish report that reacts bullishly. That would be really awesome too. So time will tell, and we will be back with you when the action is done tomorrow. Have a great night. We'll talk to you later.